Welcome back, focused learners, to another explainer. Today, we're taking a really fascinating look under the hood of digital finance media. Together, we're going to deconstruct the precise mechanics of a highly successful financial channel. Specifically, we're looking at the extreme trader formula. See, we aren't just looking at what they say, we're discovering exactly how they say it and why it works so incredibly well to capture our attention.
Okay, let's dive into this, because the keyword here is absolutely engineer. When you look at top-tier trading content, you kind of have to stop seeing it as just a spontaneous collection of videos. Actually, it's a highly engineered machine. Every single title, every phrase, every chart zoom, it's all perfectly calibrated to build authority and drive an action. So how exactly is this machine built?
Well, here's the exact blueprint we're dismantling today, kind of like rolling out the architectural plans right here on the table. We've got 1. The Extreme Trader Blueprint, 2. Hooking the Audience, 3. The Rigid Script Sequence, 4. Top-down Market Analysis, 5. Cultivating an Authoritative Tone, and 6. The Ultimate Funnel Strategy. All right, let's get right to it.
Section 1. The Extreme Trader's Blueprint. Because, everything begins right at the surface. Before a viewer ever hears a single word of market analysis, they have to click.
Now, what's really interesting about this formula is how carefully calculated it is to game both the algorithm and human curiosity. We've got an eye-catching emoji, a capitalized asset like gold, a specific timeline, say weekly forecast 11 to 15 May, and a tantalizing target price phrased as a question, like 4,900 next. It perfectly balances SEO with psychology. It's super keyword-rich for search algorithms, sure, but that question mark? That creates an open loop in the human mind that literally demands a click.
Section 2. Hooking the Audience. Moving on to the next layer of the machine. Once they've actually earned that click, the channel has about 10 seconds to prove they're worth listening to.
They do this by capturing attention through immediate, undeniable social proof. Before the host even talks about the future, they review the past. They'll pull up the previous week's signals and quantify their success, using massive flexes like 1,800 pips in our favor. Reviewing past results before looking forward instantly builds massive credibility. It basically tells the viewer, hey, I'm not just guessing here, I have a track record and here are the receipts.
And as part of this hook, you'll frequently encounter highly specific jargon. Take zero drawdown, for example. This is essentially a sniper flex. It describes this practically mythical exact entry point where a trade instantly turns profitable without dipping into the red first. Impartially speaking, using this niche jargon is just a brilliant psychological tool. It demonstrates extreme precision and sets the host up as an absolute authority before they ever ask the viewer to do a thing.
Section 3. The Rigid Script Sequence. This is the core engine of the content. If you watch enough of these broadcasts, you quickly realize there is zero improvisation when it comes to structure. And this brilliantly illustrates that predictable rhythm they follow every single time. 6 strict steps. 1. A performance recap to prove they were right last week. 2. Engagement, asking for likes and subscribes. 3. A crucial call to action, pointing directly to their free Telegram funnel. 4. Fundamental analysis for the big macro picture. 5. Technical top-down analysis on the charts. And finally, 6. A necessary risk warning. This rigid sequence is designed to seamlessly march you right down a path, from building trust, straight into their business funnel, and then finally handing over the educational value you clicked for in the first place.
Section 4. Top-down Market Analysis. Let's peel back another layer and look at the actual market analysis structure itself.
These channels operate on a really deliberate zoom-in methodology. Notice how they always contrast macro analysis with granular setups. They establish the fundamental why behind a market move first, giving you an impartial update on big-picture geopolitical factors, Middle East tensions, or OPEC supply chain shifts. Only after grounding you in reality do they switch gears to the mathematical how, diving deep into granular technicals like Fibonacci retracements and exact stop losses.
And to transition from that macro view to the micro, they use a highly effective visual tactic known as squeezing the chart. This is where they zoom way out on their software to reveal major broken triangles or massive support and resistance zones. Highlighting this specific visual tactic is absolutely crucial. It guides your eye to create a grand sense of scale. It's a visual proof that the host sees a big picture that amateur traders are probably missing.
Let's see how this builds chronologically. The top-down analysis starts on a one-week timeline to identify major trend lines and those key Fibonacci levels. Then, they drop to the one-day chart, squeezing it to find those massive zones we just talked about. And finally, they drill all the way down to the 4-hour chart to define the exact entry, stop-loss, and take-profit targets. It brings you on this incredibly logical journey from high-level sentiment down to very specific, actionable execution.
Section 5. Cultivating an authoritative tone. Now let's shift our focus from the technical structure to the channel's psychological vibe. Delivering all this information requires a very specific persona.
There is a fascinating juxtaposition happening here. On one hand, the language is intensely action-oriented. You're hearing decisive, exciting terms like triggering area, exact sniper entry, and prices flying. But then, almost immediately, that's counterbalanced by transparent caution. They'll flat out admit that no one can really predict anything, and clearly point out where a setup fails. Pairing those bold predictions with stark risk warnings is super smart. It actually protects the creator while cementing them as a grounded, trusted authority figure.
They cement this authority by cultivating a real feeling of exclusive community and expertise. The host frequently drops friendly parasocial terms like "my friends." They'll isolate critical prices using super clean round numbers like 4,600, which honestly makes a complex market feel so much more manageable. Plus, they always provide specific risk-to-reward ratios, telling you exactly what you risk to gain exactly what reward. These specific phrases are the final glue. They make you feel like a true insider who's being taken care of by a seasoned pro.
Section 6. The Ultimate Funnel Strategy. All right, we've arrived at the climax of the blueprint. We've seen the hook, the script, the charts, and the tone. Now it's time to reveal the true business engine powering this entire operation behind the scenes.
So, the crucial point is this. The public video channel, it's really just a top-of-funnel lead generator. The public videos provide the weekly logic and the why, but they're intentionally incomplete without the Telegram group. The Telegram group is the real-time community that provides the daily execution and the when. It's a brilliant recurring loop. You check the broadcast to understand the logic, sure, but you absolutely have to join the Telegram to execute the trade safely and real-time.
And that brings us to the ultimate takeaway from the Extreme Trader Blueprint. When everything is so perfectly engineered, from the specific emoji in the title to the exact minute they ask you to join a chat group, it forces us to ask a much larger question. When you watch these incredibly well-produced financial channels, is the true product the market analysis, or is the analysis just the bait for the community funnel? It's definitely something every focused learner should ponder the next time they click on a perfectly engineered thumbnail. Thanks for joining me on this experience.